Hey everyone, how's it going? Good afternoon. Hey Tim, hey Illinois Green Farmer, C Fazio, Steven, Naples fan. Rough day, huh? C Fazio had a rough day, I guess. What was rough about it? Let me know. The market kept on melting up. We'll talk about that in a little bit. Before we get there, if you're not part of my Telegram, you may want to join. You can join by going to thetradingpub.com/gain. And also, I do have to remind everyone there are scammers out there. So this is the only public Telegram channel that I have. I don't have any Discords. I don't have any other social media. It's just this YouTube channel that you're on right now, and the public Telegram channel that you would sign up by going to over here. So if you see anyone else or anywhere else that is claiming to be me, that's using my likeness, that's using my voice, that's using my videos, that's not me. I'm not going to ask you for crypto. I'm not going to ask you to give me money. I'm not going to ask you to give me money to invest for you. I'm not going to do any of that stuff. Okay. So if it's not here in YouTube or at this specific Telegram channel, then it is not me. All right. So let's take let's take a peek in there and take a look at our gamma picture. And what we saw today was it was kind of muddled, like SPY, SPX. Usually they're pretty on top of each other, but this morning SPY was all over the place, but SPX gave me a good picture. And then later, that after we got that tariff news, everything got jumbled up, and then SPY gave me good numbers, but SPX was all jumbled up. So the numbers that we got from SPY was after all of the tariff news was 633, and it stayed there pretty much all the way until maybe the last 10 or 15 minutes of the market when it finally shifted to 634. And I think we ended right at the very last second. We did go to 634, but you could see that it went from 633 and a half all the way to above 634 just in that last 1 minute. So as technically 634 was the level, but 633 was good guidance ever since we sent it out. So maybe that was what was rough, C Fazio. I don't know. This continued movement upwards was I thought we might stay here and then float a little bit higher, and then I thought that this high might be the high of the day, but then we did get that tariff news later on, and then we started to go up higher. Or sorry, I thought this high right here, the opening high, might be the high of the day, but we got the tariff news over here, and that's what sent us higher for the rest of the day. And I did note on the Telegram channel that if we got a catalyst intraday, then the picture could change, and that's exactly what happened. So you always want to be aware of catalysts. You want to be aware of what is market moving news, what isn't market moving news, what might affect markets or individual stocks, what might affect it for just 1 or 2 days, what might affect it long term. Right? So most news fall in the individual news and in the 2 to 3, 4 day category. That's 99% of news. But every once in a while, we do get things that do affect entire markets and might be longer lasting. Things like COVID, things that are systemic, things that are policy, like tariffs, like rate cuts, things like this. Those do have potential for a longer term move. So the way that we think about it is, or at least that I've learned to think about it, is that in order to predict the future, there's 2 elements to predicting the future. And so the future is equal to population times your procedure. Or sorry, your population times not your procedure, your policy, okay? And then if we can throw procedure on top of that, so much better. So for example, when we're looking at the US stock markets, the population that we're talking about is USA, United States citizens, United States governments, United States companies. And then we have certain policies. For example, we have tariffs. that it's a change in tariffs. We might have a change in budget. We may have a change in defense spending. Okay, Doge was a big change in policy. Anything that says for the set period in the future, we are going to behave a certain way. We are no longer going to enforce equality measures. We are no longer going to enforce clean energy, right? Or we're not going to subsidize clean energy, electric vehicles. Instead, we're going to subsidize big oil, or instead we're going to subsidize nuclear energy, things like that. Those are policies that are in place that control a large amount of money for a number of years. In this case, for 4 years until Trump gets replaced by a different president, and that president says something completely different, or Congress passes something, or some other policy gets put into place. So if we know the population and we know how they're going to behave, then we have a very good idea of how the future looks. If we can hone in on their procedure, how they're actually going to do it, then that would be even better. Okay, so that would just gives a little bit more detail. So an easy way to say that is like, okay, clean energy. For the new administration says we are going to have a policy of supporting clean energy. We're going to convert everything out of fossil fuels in the next 10 or 20 years. That's what Biden said, right? And if they gave us a procedure, which they didn't, but let's just say they gave us a procedure. They said specifically, we are going to start supporting solar power. We think the cleanest energy, the best, most promising new technology is solar power. Bam, you got automatic investment idea. You can predict the future, at least for the next 4 years while that administration is in place. And then you can see money moving into solar. But if they left it vague, just said clean energy, good, then it could be geothermal, it could be nuclear, it could be hydro generators, it could be all sorts of things, right? But at the very least, you need the policy and the population in order to make good and accurate predictions of the future. Now, policy is long-term. Policy is unlikely to change in the near future. It's going to be in place for a certain amount of time. So that is why it can move a market and have a lasting effect on a market. So if you have news related to policies, then yeah, it can be a market moving event over a long period of time. But if it's just news, like, oh, Trump says we should fire Powell. Okay, that's not a policy. Okay, so that'll only move, if it does move the markets, it'll only move it for a couple of days. Okay, so that's how I think about it. That's how I distinguish if something may or may not be relevant to the markets and how long of an effect it could have on the markets. Okay, let's see what you guys are saying. A repeat of yesterday's buy. The good news was a head fake. Okay, well, not yet according to the market, but it could become a head fake. Yes, it does have that. Yes. Naples fan, thank you. Yeah. Okay. So we did get news of potentially positive actions with tariffs, like we're signing deals, we're maybe signing a deal with Philippines, maybe with Japan, maybe with a couple other places. And so this, we do see some enthusiasm in the markets, but you're not seeing this wild jump upwards. We did have, on an intraday basis, a fairly big reaction, but you can see this bar is really not that big. It's about the same size as this one and 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 this one. So it didn't really move the markets all that much. It just allowed the SPY to float upwards. So we'd have a touch and a touch of the EMA 8 right here, and then a move upwards. It's not a huge move upwards. So normally I would expect this to continue a little bit, but I am seeing signs that this may not have legs. It may not go up all that far. So let's take a look at some of those. So the first one is, well, like how broad is this? So remember that I always look at the volatility environment. You know, actually, let's go in order. Let's look at the volatility environment. So if we look at VIX, VIX dropped quite a bit today to 1536. And when I say quite a bit, it's relative, right? It's relative to any of these other days. It kind of went down, which is a little, extreme. Because if we're going to stay in the 15 to 20 volatility VIX regime, then this really doesn't have all that much further down to go. And how much further do we expect it to go? So what we see here is I put out a note on my Telegram channel, the very first thing today, I think it was. Yeah, right there. If you look at my Maverick indicator, for those of you who don't know about my Maverick indicator, it is something that I built and I spent a lot of time on. And basically, it uses market maker implied volatilities and market maker premiums in order to see what the market makers are projecting for the future. And if we see them increasing premiums, then we know that they're starting to think that there's going to be a large move coming into play. So if I look at that on my Maverick indicator, ignore this up here. I don't care about this. What I care about is the stuff on the bottom. Okay. So what we see here is today, even though that VIX went down, what I see is basically market makers expanding their prices, expanding that implied volatility. So this is higher than this bar. These bars are all kind of the same, but we do see a very slight upward movement. And then today, even more of a movement. That tells me that market makers are concerned. They're thinking that volatility could start expanding and move up. And so they're going to ask a little bit more for their premiums on options in VIX. And we can see that this is very far down, like it's been super cheap. The volatility has been doing nothing for so long. It got super cheap down here. We had that spike with the Liberation Day, and then it's been coming down ever since. And then now we're like super, super low levels. And that's also indicated by these coils right here. So when I said it in the morning, we are at 0.31, 1.98. And you can see now after today, even though the VIX went lower, these coils are starting to just barely expand. And just once they start expanding, if they expand a whole bunch, then that's when you're going to see volatility spikes. Sort of like this right here in March. Okay, so if we start seeing this, there's potential for VIX to start moving up. Let's see what happened in March. Right here, see? This is what happened in March. Volatility spiked up, and this was a long-term movement. It wasn't just a couple days. It stayed up there for quite some time. And then in April, okay, it was a very sudden because it was Liberation Day. It was more news driven. So this very suddenly spiked upwards, and we saw volatility over the next few days just skyrocket. Okay, so that's giving me pause. It's making me super cautious about any moves to the upside, and it makes me want to use VIX as a hedge. So anyone who saw me in a profit panel last week, I talked about hedging using VIX. So I went and put a small baby hedge, a tail risk trade last week, and I just did another one today because of this picture exactly right here. So I would be very cautious about this move in the S&P 500 because we could get a very sudden pullback at any moment in time, according to VIX. Now, it doesn't have to happen. It could be wrong. Market makers can be wrong. They don't get everything right 100%. I'm just saying that I was already cautious, and now it looks like the market makers are getting cautious. So chances are, probabilities are that we're all seeing something that might actually be happening in the near future. So I'd be very careful because of that. The second thing that we look at is signs of buying, and specifically which sectors are moving. So what the biggest thing right here is that movement upward in SPY. That's a 0.85%. If I look at equal weighted SPY, RSP, it was a 0.83%. This is much more aggressive of a pop and move than the move in the SPY. Before the SPY moved upward, while it was still flat, RSP had already been up. How do I know that? Even if I didn't look during the day, I know that because this gapped up. Right? There's a gap right there. So even at the very beginning of the morning, RSP was already moving higher, whereas the SPY, that I guess you could say that gapped also, but it wasn't moving the same way. This was flat, and RSP had gapped and run upwards. So this is looking like a clear movement upwards in RSP. That means we're getting breadth, which is positive for the S&P 500, as long as MAGs maintain their strength, and as part of MAGs, SMH maintains its strength. So when I saw earlier in the day, it didn't look like that was the case, but let's actually look at the end of the day and see what actually happened. So MAGs, okay, yes, up, but it didn't gap and it didn't run upward. It didn't make a new high the same way that SPY and RSP did. So that tells me that it was that breadth, that wider range of sectors moving up together that caused the S&P 500 to move up. It wasn't the MAGs at all. So it's not a terrible sign, but it's not a good sign. It doesn't support like markets screaming higher. If we look at SMH, a very, very different story. It opened pretty much where it closed, so no gap whatsoever. It did end up a tiny bit higher, but not really, and it's still below that EMA 8. This is a retest of the EMA 20. Test the EMA 20, retest of EMA 20. We don't have a confirmation bar. We are not clear to go into SMH yet. So that's kind of interesting to know. So let's take a quick look at NVIDIA. NVIDIA is looking okay. So NVIDIA, if this had closed a little bit higher it is pretty close to the high of the day, but if it had closed at the high of the day, then it would be, looks like it might be above yesterday's high or yesterday's open, in which case I would be a lot more comfortable with NVIDIA. Let's take a look at ANET. ANET did well. Let's take a look at, who are my AMD? AMD did well. NTAP. No, am I not NTAP? Why am I blanking on my SMH stocks? Let's get a bar chart. SMH. Why would Japan market go up in a tariff deal is better than proposed, but worse than pre-Trump? So profitability and bottom line for Japanese exporters would decrease because the market was anticipating an even worse deal, right? So Trump claimed that he was going to tariff them like 20%. He ended up tariffing them less, or the deal ended up for being less. So that means the market had already priced in, or the Japanese market had already priced in a 20% tariff. So when it ended up less, then that was room for the Japanese market to go up. Okay, let's see. TSM. How could I forget TSM, AVGO, AMAT? Okay, TSM looking good. AVGO looking good. AMAT, no, not at all. So it looks like NVIDIA did okay, but it looks like SMH was interestingly dragged down by smaller names, not necessarily the top holdings. Okay, So overall, I'd say that SMH is kind of okay, right? So this is so net neutral to slightly positive is what I'm seeing right now because we have that market breadth, which is very good. And if they can sustain, then I'll move up. Now we'll want to look at individual sectors, like how they move today, and then momentum levels. And then what I really want to see, which I already looked at intraday, so I kind of already know the answer, but we'll look at it as the number of stocks that are making these highs. And if we're at an extreme level, then that's a little bit of a warning sign. So let's take a quick look. Let me go back over here. We'll just go with these. Actually, I want to see just today. Okay, top 5 sectors today. This is now operating on 40 sectors, not the 20 that we had yesterday. So we see a very different result. AI, robotics, shipping, that's interesting. Nuclear, aerospace, defense, pharmaceuticals. So kind of broad in the top 5. Let's go, let me see top 10. Okay, healthcare, definitely broad. Timber, industrials, biotech, building products. So some themes here: wood, building products, industrials. So I imagine yesterday we had home builders and real estate that did really well. So that's all within that theme. We've got some pharmaceuticals and biotech. Healthcare, that's within a theme. And then we've got all the rest are, not necessarily, not necessarily within a theme, but tech, AI, robotics, that's not too surprising. That's been a focus. Okay, so we do have broad sector movement today. And then if we look at our momentum levels, take a look at how green everything is. This looks so different than when we were looking at it last week, especially this 50-day column. Look at how many are so high in their 50-day column. These are extreme levels: utilities, materials. So if I click on materials and I go out 15-year, 10-year, okay, I'll go 15-year or max. No, I'll just do that. Okay, that's at an extreme level. Okay, so every time we're up here, we do come downwards. So I am expecting materials on the 50-day level to come back down. Okay, so anything that's up in these 90s or even in these 80s, I expect those to pull back. These are starting to get really extreme on the 50-day moving average. It's getting a little too extended. If I look on a 200-day, then this is really interesting. 90 also on the 200-day moving average. So we got a little excited about utilities kind of breaking out right here. What that's telling us is that move is too extreme. Okay, we got this huge red bar today. It did start out higher, but then that got sold off. So we're going to anticipate a pullback in utilities. And let's take a look at materials. Okay, same thing. So that it went up, it challenged this high right here. This is a nice big move in just a couple days. We're going to expect that pullback in materials. Let's see anything else over here that's standing out. Industrials maybe also. So that's not great news because a lot of the market, the breadth ones, the ones that were giving us the breadth, are looking like they need to pull back. Let's take a quick look at consumer discretionary and industrials. Yeah, same thing. And then consumer discretionary, not as bad, not nearly as bad. This is more smoother action, but it does look like it could use a little bit of a pullback. So that taken together, let's take a look at Dow Jones. Okay, the little breakout right there. So what happens with a lot of breakouts, especially in the era of algos, is they get sold off. They become false breakouts. So we need to see that continuation and pullback in order for us to be really confident in that breakout. And the bad news for something like Dow Jones is that it didn't run super high. after in the breakout, it didn't just run away. So those ones that run away, those are the ones that have more potential because they have to fall way lower in order to break to cancel out that breakout. And then if it just pokes its head above it like Dow Jones did. So that's telling me to be cautious. And then if we look over here to our sector scan, not our sector scan. I want to see 90-day highs. Okay, 577 is a lot. 300 to 400 is already a lot. 577 is a ridiculous number. We almost never see it. And if I look yesterday, okay, it was only 329. 329 was already getting up there, but to suddenly add 200 and something, or 250, 60, that is a lot to add in a single day. So there's a lot of stocks making their 90-day highs. We expect many of them to start pulling back down. So if we look at 52-week highs, 360, that's a huge number of 52-week highs. So it's not to say that this isn't good news, and that doesn't mean that we're going to reverse trend. What it means is that we're just a little overextended. Even though it doesn't necessarily look like it on the SPY, we're just kind of pretty much floating near that EMA 8. What we're seeing is that when it comes to momentum, when it comes to market breadth, it is overextended. They do need to pull back, just like we were seeing in the bar chart, where we were seeing a lot of these sectors are getting very extreme on their 50 and 200 day. And the ones that aren't, like consumer staples, it's been in a giant rut. No one's interested in those right now anyways. Then we've got financials we can take a closer look at, but we already looked at industrials. Healthcare is kind of middle of the road. I wouldn't be too worried about healthcare, but materials for sure. Real estate is getting really extreme in terms of the percentage in between the 50 and 200 day. So that's looking like it needs a mean reversion. Com is looking okay, but the 200 is a little high up there. But utilities, industrials, financials, discretionary, those are all looking like they need mean reversions. Let's take a quick look at communications and financials. Yeah, not super strong, but it is in a position where it's testing that high, so it could pull back. And then no, financials. Similar, very similar to communications. So in any case, there's a lot of signs that are saying that, look, just be cautious to the upside. Yes, we made another all-time high in the S&P 500. It just means that we're getting a little far from that MA50, a little far from that MA200. Then normally we do pull back at least a little, maybe to the EMA 20 this time instead of just the EMA 8. But that EMA 20, it's not devastating. It's not a devastating fall. And if we go and we look at that, that's only a 2% move. So before we were talking about a 3 to 5% move, maybe we just get a 2% move. Right? And then that's the end of it. And that opens the door to further movement upwards. But we'll see. All right, that's all anticipation. We want to trade what is in front of us. Anticipation is just to get ready. It's not to actually place a trade, except for maybe that VIX tail risk trade, and then just be ready and be prepared. So what that means to me is, how am I going to be prepared for it? Well, I'm going to be prepared in that, hey, my next opportunity, my next buy the dip opportunity might be coming up. We're in a volatility regime where buy the dip strategies perform the best. And so I want cash available so I can buy a dip. So I don't want to load up on positions right now, especially if I'm thinking we could pull back. So if I am taking positions, I'm taking them very judiciously. I'm taking them in reasonable or small size, and I'm leaving most of my room in cash so that I can take advantage of those pullback type of opportunities. So that's what anticipation looks like. It's not, oh my gosh, I'm anticipating a pullback, so I'm going to buy a bunch of shorts. No, it means get ready for opportunities within the volatility regime that we're in. Okay, so let's see what you guys are saying. Mags of NASDAQ affects SPY more than Dow. That is true, based on market cap. That is true. Yeah. So Dow is going up, but what we're saying is that Dow went up, or at least the market breadth went up high enough to really overcome what Mags was doing. Well, actually, they were both moved in the same direction, but Mags just moved a baby bit, and so a lot of that movement in the SPY is coming from all the rest of it, not just the Mags. Okay. Would we look at Mags for impact? Yeah, Mags will definitely be a driver. So if we're seeing money rotate out of Mags into other places, then that is one side. But that's not what we're seeing here. Mags went up a little bit too, and so did almost everything else, at least today. So that's just more money piling in to an already overcrowded market. That is a sign of a potential pullback, because the bigger boys could take profits at that point in time. Or it could be, basically, it looks like capitulation to the upside. Oh, okay, fine. This kept on going up. I thought we were going to be in a bear market. We closed below the MA 200. I thought we were going to bounce right back down. I thought the end of the world was coming. All of those doomsayers in the markets are always telling me that the next recession is right around the corner. I thought they were right, and I positioned myself right here for a nice downward movement, and it just kept on going up. Now I'm at, well, at least on the Mags, I'm at all-time highs again, and I can't bear to see this anymore. I've got to close out my shorts and participate in this bleed up or the melt up. And then that is capitulation to the upside, and that's when a market can pull back and correct itself. I mean, it can do it other times also, but that's a high probability point for market to correct itself. Okay, and then yeah, so that's what I'm looking at right now. There are signs that pullback, we're closer to that pullback than any other time. I said that on Friday when we got options expiration. I thought options expiration sometimes does trigger events. So far, we haven't gotten it. But then when we looked at those options expirations last week, what I said was actually not this week. I said actually next week is the more likely time when we're going to get that pullback. Now we're halfway through this week. So, hey, unless we pull back Thursday or Friday, then yeah, we could get that pullback next week. So we just want to be careful with any longs. Just know we want to keep our powder dry for a pullback, because that is the highest probability trade and the best performing trade in this volatility regime. We always talk about volatility regime because we want to be aware of which strategies will perform the best. Okay, once we get that pullback, then we can go in. If we end up in this for, I'm not talking about, oh, we have 2 or 3 days of VIX above 20. If we have sustained days above 20, then we are in a different volatility regime. We're no longer looking for pullback opportunities. We're going to look for breakout opportunities. We're going to look for high flyers, fast moving stocks, ripping trends, things like this, rather than very smooth, easy trends. So, but for now, I don't know. I don't know if we're going to just spike up for a couple of days and come back down, or if it'll end up being something deeper. If it's only 3 to 5%, then for sure, if it's only 2% back to the EMA 20, then it's probably going to look like this. But if we get down to 50%, It could look a little bit more like this. And if we break 50, if we break 200, then it'll probably look like this because people will probably panic at that point in time. But this is all, anticipation. We don't really know that right now. Okay, so let's take a look. Do we look at everything? We looked at signs of buying. We look at breadth. I think we pretty much covered most things. So what opportunities am I looking at right now? Not much. Like I told you guys, I'm not going to really look for a lot of longs in this environment. I'm just like, I need to see this market pull back first. So I could look for some income type of plays. Yesterday I was telling you about how the market cannot continuously on a weekly basis keep on making a really big gains, like 20-point gains. It can make 5-point gains. It can make maybe 10-point gains. But even those 10-point gains are very unlikely many weeks in a row. So this is 20, then 10, then -1, then +4, then 6, okay? So you can see that a large move is followed by much more mild moves. So we could play that phenomenon and say, okay, well, there's a limit to how much this market will go up. There may not be a limit to how much the market can go down. So you could do a nice debit bear put spread. You could do a credit bear call spread somewhere above where the market is and just play the movement downwards. There's a lot of ways that you can use to try to capture that phenomenon. Okay? I wouldn't go outright short though. Okay, this is not the time. When a market keeps making all-time highs, you don't want to just buy a put and just thinking that it has to pull back. What we're saying that it's a very different attitude than what I just said right there. If I do a bear put debit spread and I happen to lose because this thing keeps on melting up, if I do it again, the chances of me losing on that second one are a lot smaller because the market would already have moved more than expected. And then for it to happen a third time is even less, okay? It's almost impossible. So if I stack those and I do 10 trades, I win 8 and I lose 2, okay, then I should end up, if I get paid appropriately, if I'm not doing like really crazy spreads that are really close to the current market, and I'm not going so far out that my reward risk is terrible, then if I find that happy medium right there, then if I do these 10 in a row, 10 weeks in a row, I should be very profitable, either having win 8 out of 10 or 9 out of 10 of them, maybe even 10 out of 10 of them. Okay, so that's very different than saying, I think we're at all-time high, buy a put. Okay, what do you do when it doesn't work out afterwards? You buy another put and another put and another put. Where do you put those puts? Because every single one of those puts has the potential to lose money, because even if it doesn't cross your line or your strike, you paid premium for it, so it doesn't have to cross your strike in order for you to lose money. It just has to not go quite as far, right? Enough. Your cushion is only how much you paid in your premium. So it's not the same thing. You can't get the same type of reward risk structure if you're just trying to put that outright put. Okay. So that's what I'd be focused on right here. Totally agree. VIX is pop at some point. Key point is wait and let them pull back to you. Better entries. Yes. Okay. That's exactly right, Bugs. Okay, so I don't have all that much prepared. Maybe we could take a quick look at those sectors since I did get the 40 running. And we'll just see if we can find any commonalities across this time frame. We did it yesterday. We found some good sectors, but after looking at all 40 sectors, they are not the absolute top performers. So let's take a look. What we see here, I see URA, a good number of times here. Okay, so nuclear and uranium. Then we've got cryptos on here many times. And it looks like XME. Yeah, 1 week, 1 month, 2 month, 3 month, 6 months. The XME is on every single one of these except for the daily. Okay, so, but again, XME could be completely skewed by, was it MP? Yeah, it might be just completely skewed by MP. So I'd be careful. Just, yeah, XME's, it's parabolic, and it's been parabolic for a lengthy period of time. So I'd be very careful. Oh, this definitely I would wait for a pullback. So XME is not necessarily a sector I'd be looking at right away. Then we've got nuclear, and the other one was blockchain. Nuclear. Yeah, so this one I'm a lot more comfortable with because it did consolidate sideways and come very close to that EMA 8 before it started its next leg up. This is a pretty large move, so you could see something similar to this, maybe a little bit of chop sideways, which we started today, and then potentially moving higher. But if we get a broad market pullback, that is going to affect every sector. So since this is far away already because of yesterday's movement from its moving averages, I would just wait for a pullback here as well. And then the other one is blockchain stuff. It's very strong trend. We can argue a decoupling of crypto with the S&P or with the equity markets. So it might still be an okay place to put your money in case of a broad market pullback. We looked at Ethereum, which had been doing very well today. You see that? That's what I'm talking about. If you have a big rush upwards, it is very rare that you can continue with that type of momentum repeatedly. So you would at least expect it to slow down, chop sideways at some point. So Ethereum, it needs a little bit of a pause. Let's look at Bitcoin. Okay, that's what it did. Yeah, it's doing its pause. MSTR, baby pullback and earnings. Mara, pullback to the MA200. If this can bounce and give us a green confirmation bar, especially since it has earnings, then that would be a very positive sign. If it breaks down, then it's no good. And GLXY is, yeah, so this was big surge upwards, and then this is still a relatively big surge upwards. So this one defied the odds, but then can it do it again and again and again? Probably not. Okay, so here I would be, if I was in Galaxy, I definitely, and holding a position, I'd be looking for an exit very soon. They also have earnings. So it looks like every good play right now is overdone. So no matter what, even when I'm looking at the most popular or sectors, the ones that got the most money over the last several time periods, even those guys need a pullback. So overall, I'm keeping my powder dry. I'm not going to be looking for any new positions, and I'd be looking to potentially take profits on any profitable positions that I have in preparation of that pullback. Because if and when we get our pullback, I want my cash available. I want to be able to take advantage of those opportunities. Okay, I think that's all I've got for today. So we'll end it there. Thank you guys for joining me and spending your afternoon. And I will see you guys later. Hi, Terrence. I caught you. You caught right at the tail end as I was wrapping up. So have a great rest of your day, and I will see you guys tomorrow.